What's up, traders? What's up, tycoons? Super excited for today's video. Real quick one, we're going to break down TLT. We're going to take a look at bond market volatility and also take a quick look at the SPY and the Qs. Be sure to smash that like button, subscribe to the channel if you guys are new. All right, today's video, as always, is not financial advice. This is nothing more than just a simple breakdown and, technical analysis. Now, if you haven't been paying attention, TLT has been bleeding massively, right? We had a giant bear pennant forming here, right? And even though we are starting to see signs of a relief rally today, TLT is up about 50 cents in the pre-market. Okay, technically, if this bear pennant wanted to play out, we could come down to 87.29 and also as low as 86.47 and 81.14. Now, do I think that that's the high, probability scenario? No, not necessarily. But we do have to keep an open mind. We basically got just a couple cents away, about 30-40 cents away from our October lows. And it's very possible with Jackson Hole coming up that we could come down into that territory, right? So let's break it down. You can see here we came down to that 92.31 support level. Back when TLT was in the hundreds, 105s, I told everybody that, there's a high probability we're going to come down and fill this gap down here to 95. And that's exactly what we did, right? And we came down and we've been, testing these support levels. You can see, trying to respect them really well on the daily time frame here. But ultimately, we test them, we do a dead cat bounce, and then we break through. We had a dead cat bounce, got rejected at the weekly anchored VWAP at that moment. And then we come down here again to our major support level, 92.30, and it appears we're getting a dead cat bounce. So 93.22 is going to be a big resistance level. If we can get above 93.22, then we have 94.73. And the big thing we need to pay attention to is the possibility of a dead cat bounce, right? That's pretty much it. Now, one thing that I do want to highlight is this gap down and this doji right here. This could signify an abandoned baby chart pattern. Now, if you're not familiar with an abandoned baby, basically we will need to gap up today, which that's what we're doing. We're gapping up about 50 cents at the moment at this time of this recording. And if we can get a strong daily close above our 93.22 area, then that would give us the abandoned baby pattern and is in a bullish reversal pattern. Okay, and that's when these price targets that I just gave you guys earlier, 94.73, and then about 96.50 to about 96.50, 65, those are going to be some strong resistance areas. But the big warning is Jackson Hole. Okay, that's what you need to be cautious of, is that if this is all a giant dead cat bounce and we have Jackson Hole, you're going to continue to see stuff like this go up, right? And this is the move. This is basically your bond market volatility. Now, this is right around the last Jackson Hole, and you can see bond market volatility actually dipped a little bit before skyrocketing. And it's very possible that that's what we're going to see, right? You see, you have this huge spike up leading into it in anticipation. This is the Friday before Jackson Hole, right? And that's exactly what we got here. The Friday before Jackson Hole, we saw this huge spike up, and then we start to see it consolidate. And this is the bond market, essentially the week in, pricing in some of that volatility around Jackson Hole. And it's very possible we may pull back down here, right? And we start to consolidate, and then we get that huge spike up. That's definitely a possibility. This is the banking crisis here, and you can see bond market volatility skyrocketed. When you take a look at the TNX, which is like, the one that I like to look at for the treasury yields, TNX has been breaking out. We actually got above the price target here. We were targeting 4.33 on this breakout for a wave 5. So, it appears that today it's going to be opening down a little bit lower. And this chart right here would kind of suggest and support the dead cat theory on TLT and also support the abandoned baby chart pattern, right? Because if we are completing a 5-wave move to the upside, you would be expecting an ABC to the downside. And as TNX drops, you're going to see, things like TLT go up in the market. So we'll just have to see if this is actually the true structure, but it does look like the structure to me. And we would be looking for a correction in TNX, and that would result in TLT going up. So we may actually be able to get above some of our resistance levels in TLT. But as I mentioned, Jackson Hole is really going to throw a wrench in everything. Now, when we take a look at the QQQ, right, and this is your NASDAQ 100, I want people to keep in mind, the potential setups here, okay? This also looks like a 5-wave structure to the upside, where we got, one, let me use a different drawing tool real quick. One, and then two, three, four, five. And we would be looking for an ABC correction to the downside. And what would that do? Well, that ABC right here would put in a right shoulder. Okay. So, this would give us a head and shoulder pattern if we were to get that ABC correction. And it appears we're trying to get our B wave correction to the upside right now. That potentially could give us a head and shoulders. Now, QQQ is also gapping up a little bit here pre-market, but we're approaching a very strong level of 367.25. Above there, we have 370.47. Right, and 370.47 to about 372, 373. That's going to be your right shoulder target. If we can flip 373 to support from resistance, then that's when we have a chance of retesting all-time highs, or not all-time highs, but 2023's highs, potentially even breaking out even further. Let's go ahead and take a look here at the S&P 500. All right, the S&P 500. Also, we're seeing it gap up today. It did a pretty good job of retesting, old resistance as new support. You can see this level over here. Again, this is the highs right before Jackson Hole, and that's exactly where we bounced at on Friday, right? And we're starting to recover. But again, if we're looking at these things as 5-wave structures, and we have the wave 1 up here, okay, and we have our wave 2, 3, 4, 5. We'd be looking for an A, B, C correction, right? That would look something like this, and take us down towards this lower trend line here, and that would put in a head and shoulders, right? And it's very possible for the market to get, these 5 to 10% corrections, which essentially is what the S&P 500 got, right? From the highs to, from the most recent highs to the most recent lows was down to 5.81%. And everyone seemingly flipped and went super bearish. I've been loading up on things like Tesla. I actually just wrote about Tesla in my newsletter. If you guys don't know, I put out a completely free newsletter with trade ideas and different setups, different things like that. And you can see Elon Musk here smoking a joint because this thing is on fire. Now 233.34 is the 23.6 retracement level. That's pretty much where we got stopped out at yesterday, but you can see it's gapping up at 240.99. There's a gap up to fill here from its earnings report, right? And ever since earnings, it's really been bleeding. But at the moment, we're gapping up above this trend line. We got 245.94, 256.13, and 266.31. Ultimately, if we flip 266.31 to support from resistance, very strong chance Tesla is going to fill this gap. Now, again, I just really want to emphasize Jackson Hole is the real big thing here. Now, this is what an abandoned baby chart pattern looks like, right? Where you get that gap down, then you get that doji candlestick, and then we're seeing the gap up yesterday, and then we're gapping up today. So, if TLT gaps up today and has a strong, close similar to what Tesla has here, then this is a possible scenario that you would be looking at in TLT where it continues to rally and has a significant move to the upside. Not only is Jackson Hole really the big thing this week, but Nvidia is also really, the big thing this week. You can see here we had one of my favorite chart patterns known as the inverse bump and run pattern. Right, we have a couple anchored VWAPs on here as well. But really we were targeting these levels here on when it comes to Nvidia, right? We had the gap fill right in through here, and then we had our prevailing downtrend. We had the bump down in price. You can see we broke through that trend line. We gapped up above the second one, and this is pretty much essentially exactly how an inverse bump and run pattern plays out. It's going to come up and take you up towards the top of that pattern, and you can see Nvidia's gapping up pre-market to 477. So, it seems like everyone, went completely bearish when this thing was down here almost at 400. And, in a very quick matter of time, this thing has already moved up almost $100. Nvidia is really, if this thing crashes on earnings, then, RIP to the market, right? A lot of the market is going to sell off. But if this thing rallies tremendously like it previously did on its last earnings due to the AI hype and the AI buzz, then it's very possible that the entire market will follow along with it. Now, that's pretty much it for today's video. Be sure to smash the like button, subscribe to the channel for more. Don't forget to check out that free newsletter. There's a link in the description or the comment section down below. If you guys like free trade ideas and free, really good financial content regarding the stock market and investing, I highly recommend signing up for that.